Boom, we are alive, ladies and gentlemen. Thanks for joining us today. I hope you're enjoying this ride. When I put the last video out, we're like up 60, 70% in some of the assets that we pointed out. So that video aged extraordinarily well. Like I said, last chance to dance the last 2 months. And now you can see the reason why I said that. Once you see these aligning factors, which we'll go over again, the bull market, you have the highest amount of confidence with the least amount of time that you actually have to wait in the market before you get the explosive moves that everyone's excited about. Now, they want to think that it's mostly due to Donald Trump getting voted in, and well, that did help. It probably pushed us higher than we would have been had Kamala got in. The bull market was going to take place anyways because there was just limited supply and increasing demand. So here on the daily chart is the Bitcoin chart that we've been following for quite some time now. We've talked about these accumulation ranges and why they're so valuable to understand and when to get in the market with the least amount of time having to be kind of washed around. As you can see right now, I still have this kind of area to the right drawn out where it says SOS and LPS phase, which have not completed. Let's take a comparison look with gold here. Once gold broke out of the back of its trading range, it was very, very short order. Let's zoom in here a little bit too, because this green trading range is the one that's most important. Once we broke out of the back of the range here, you jumped up, saw an LPS. Now, the LPS range here was approximately, I think it was about 60 or 70 days, 133 days. And we'd actually seen something very similar with Bitcoin prior. So if we go back to Bitcoin here and we zoom in on this same trading range, one of the things I wanted to circle out was this portion here, which is a type of SOS and LPS, because we went SOS, LPS. Now this stands for sign of strength and last point of supply. And this range here was approximately 70 to 80 days. So again, half the time of gold. We've gone over that because Bitcoin trades 24 hours a day, 7 days a week globally. The normal time for one of these giant cups and handles or reaccumulation or SOS is usually about half what it is in the traditional markets because we have twice the amount of time and where the asset is actually being traded. So we saw about 65 days when we were in a trading range. Now, if we zoom in a little bit closer just to get a bit of the range, remember this is when the ETF first got approved. There's a lot of hype around this. I know it's kind of a messy chart, but I just want to focus on this. This was, and this is just approximate, a 20% trading range that took around 70 days. And this is a nice LPS. So I suspect that we're going to get something similar here. Now, because we know we're on the larger time frame, we should expect a fair amount of volatility, maybe here, maybe between even 100,000. We might not be at the top yet. So what I like to do is generally zoom into the market, knowing that we're so bullish and why. We try to keep an eye on these smaller trading ranges. Now remember, the shorter the time frame, the less reliable the trading range analysis becomes. So here, this actually looked like a perfect reaccumulation range. SOS and backup phases are going to take place and maybe higher. But because we're on the 15-minute, is very unreliable. And this actually might be the backup phase here. Now, again, I don't like to chart on the 15-minute. I really don't like to chart these bigger ranges on anything other than the large time frames because they're just so unreliable. Whether it's an inverse head and shoulders or cup and handle, if you're less than the daily and have years of experience and chart time, it's just not reliable and it's not really worth trying to rely on. But again, notice that gold here, there was around a 70-day period right here where the SOS and LPS phase was quite tight. So let's go into the daily and take a look what that looked like. Just again, so we can kind of draw this out for you. Here we would have had our regular parallel reaccumulation range and a perfect SOS and backup phase. Again, as these usually become diminished in power. So gold might be done, but what I think we're going to see here for gold is just again another trading range take place. This is probably the last one for gold. As you can see, as you move up, they actually get larger in volatility, or I guess percentage increase and decrease between the top and the bottom of the range. And if we go back to Bitcoin, we can see the same thing here too. If we scroll out to the daily, you basically can't even see that 15-minute little reaccumulation range that we were potentially looking at. But again, if you notice, even though we had, let's actually go back to the very beginning of the 2021 bull market. Here's the SOS and backup phase here. Here's your SOS. Here's your LPS or backup phase. And again, this was approximately 25 to 30% and around 40 to 50 days. So we're looking for a fairly big drop here. Something although it might not come right here. Again, this is the important part to remember, is that the SOS and the LPS phase are really just a signifier of those things taking place. So how do we do that? It's not just in trading range, it's also within the supply and demand signature. This is the most important part of the Wyckoff methodology. Anyone who focuses on just trading ranges hasn't done enough of their homework yet. The LPS and SOS are signs of strength and the last points of supply, which means we have to be looking at the supply because that's where that story is told. So as you can see at the breakout of the market here, we saw some significant supply signatures. This is the first sign of an SOS, massive amounts of buying. We also actually saw this within the net inflow for Bitcoin as well. Just huge amounts of buying, a significant increase in buying all the way from September to November 7th, 13th, basically. And those inflows are still increasing. Now, we've pointed out a few reasons why I think that could be the case. China's printing trillions of yuan, their M2 is increasing, the Federal Reserve is going to decrease rates. There's nothing they can do other than just print more cash. So there's kind of like a non sequitur here where just there's the only thing that they can do, so that's what they're going to do, and this is going to be the result of that doing. Back to the chart though, considering that this has only been a 5 to 6% trading range, I don't suspect that this is the LPS. I think the LPS is going to have a much bigger range, usually around 20% would be my guess. So this could actually be the primary support that we're witnessing here for the first part of the LPS. If I were to rough guess where I think we're going to go from here on out, I'll draw it out and see if we can get it right. I think we'll probably go up to like 100K, come back down to like 87, 88, do something like this, back up to 98, come back down, and then go up all the way to 130. So this is what I suspect an LPS range would look like. Yeah, this is 20%. This is around 15 to 20%. This is pretty close to what I think will happen. So I'm going to leave it drawn up there like that. If anything, what we're seeing on the 15-minute is just going to become the primary support for a much larger trading range. And this happens all the time. So that's kind of what I'm guessing. And again, when we look at gold, there's kind of a similarity here. We could make an argument that we're right here and Bitcoin's just about to explode as well. Take a look at the similarities of these. Let me delete this, but hopefully you guys, if you want, you can save that. But take a look at the similarity between this idea of the breakout of the back of the box and the first kind of reaccumulation range. So here we are for gold. The green one is the larger trading range, which was what we were just in for Bitcoin before breaking out. Here it is for red in Bitcoin. But notice how once we broke out, we had two little sections. We had a section right up here, a small, tiny ass reaccumulation range before the real SOS and LPS took place. We could make an argument that maybe this is just that really small little bump along the path before we see that up to 120, 130, and then a real LPS comes in. But again, just remember that the SOS and LPS are not set. We haven't seen the large amount of supply come into the downside yet, so it's not completed. So we have to wait. It's going to happen. When it's going to happen, it's harder to guess. We could just be in a little retest of the market right here, something similar to gold, before going up much higher for Bitcoin. But either way, as I mentioned the last 2 to 3 months, this is all last chance to dance. If you go, you can watch my videos from basically, I think it was like September 7th. I was like, oh my God, this looks like a test to me. We've just tested the point of control. These are all super important. You can go back for years of my videos. I almost always wait until this very last moment comes in to go long the market because there's no sense. I'm not a day trader. I can't sit around through all of this nonsense. I would rather just wait, watch the markets, and as soon as this moment comes in, basically what's known as phase D of the Wyckoff accumulation due to the supply signatures and the trading range itself, then I can be in the market for a very short period of time and have the highest amount of gain with the most amount of confidence. And again, it's done me well over the last few years, and I'm only getting better at recognizing those things. So I'm excited always for the future, and I have I'm going to definitely be shorting the meme coin market when we get to the top of this. But effectively what I see for Bitcoin, or the possibility here, is it would be nice to have a healthy retest of some of this, back down to 80,000, but we don't have to. We could just go up to 100 and something before we see the SOS and LPS phase. So once you're in the bull market, the market makers generally want to push the market as high as possible, as fast as possible, because they know they control the supply, and the less people they can let get on that rocket ship, the more money they can make when it comes to distribution. So they go through their entire markup phase, generally trying to get rid of as many assets as possible. And what you have in the early stages right now is most likely people just taking profits who have been sitting in either a loss or on positions for a long period of time, because that's what that large trading range is meant to do. It's meant to kind of draw you out, confuse you, make you annoyed, and then that way when the market does blow up, you kind of sell a bunch of your assets back to the market maker who is just still in their markup phase. And again, they want it to go up as fast, as quick as possible, because they don't want many people getting on that ship. Because the more people that get on the ship, the harder it is for them to drive it up, and the harder it is for them to control the supply. And that's what we see in a few other assets as well. So I'm going to really go over, Sui's been one of my favorite performers here. And again, you can see kind of the fluctuation of the use of these trading ranges. The falling ranges are some of my favorites, especially for if you're using them as distributional accumulation ranges. And notice the switch here from distributional accumulation to straight up reaccumulation. Distributional accumulation is falling, and then boom. This is why I took my entries, why I went so, you saw, like I shared it on Twitter, it's like 2,000% I'm up on this trade right now. But that's because, again, this level of confidence within this tight range here is so high. Yeah, it's one of my favorite times to be in the market effectively. Another interesting story here, Solana also was going down that falling range, now broken into its SOS, looking for a back test to the top of the range here most likely, which again could lead to the reason why Bitcoin will probably drop here too, or not the reason, but the likelihood that Bitcoin will drop here is there's a few aligning factors that say we should actually test a little bit lower, and we'll probably see a decent SOS and LPS. But don't be afraid, because this part usually lasts 30 to 50 days. You get a nice trading range that takes place here. So this is the last, like this is the DJ is only gonna play one or two more songs. Like if you're not in a position, you could get a chance to take a position here, but that's it. After that, we're gonna go straight up and out, and the market's just gonna rip roar, and everyone's gonna be face melted, and then it's gonna be over. Market cycles happen real fast, and they happen real fast on purpose. Is because the market operators spent the last like 300 days building this reaccumulation range. They're going to spend about 100, usually half that, into the SOS and LPS stages, into the final blowout of the market top, and then it's over. Because they don't control the asset anymore. They've started to sell a ton of it back onto the market. The market gets picked up by retail. Retail thinks it's going to 400,000 when it's at 200,000, and then the market makers just sell absolutely everything they have. The ETFs get massive outflows, and we start the process all over again. Human psychology is an amazing thing. It always repeats itself. No, you don't have to, you can add high frequency trading, all this nonsense, it doesn't make a difference. Human consciousness stays the same. Supply and demand characteristics stay the same. If there's a limited supply and increasing demand, then the price is gonna go up. If there's increasing supply and limited demand, then the price is gonna go down. That's it, super simple, really easy to think about, meditate on it, think about it one more time. Limited supply, lots of demand, price go up. Increasing supply, limited demand, price go down. Anyways, T with the Arcane Bear, we'll see you guys in the next episode.